Hi guys, welcome back. George Baltakian here. Today in this video, we're going to cover depreciation in real estate and how you can benefit from depreciation to grow your rental portfolio. So here we go. Depreciation is essentially a tax benefit where you would be able to deduct the cost of buying and improving a piece of rental property on your taxes. And to be clear, this is for rental property only, either residential or commercial, but not for your primary residence. So instead of one large deduction for the cost of purchasing or improving the property, the government allows you to deduct the depreciation across the useful life of the property. So essentially deducting the price that you purchased the property for minus the value of the land, which means that it's only the value of the improvements and the building. So deduct that cost over the useful life of the property. The useful life is defined as 27.5 years for residential real estate and 39 years for commercial real estate. So 27.5 years would mean that you could deduct 3.6% of the value per year, and 39 years would mean deducting 2.6% of the value over 39 years. So taking the same amount in deductions per year over the useful life of the property is referred to as straight line depreciation. However, there's another method of depreciating the cost of the property and the improvements, and that's called cost segregation. So a cost segregation analysis would separate certain improvements and components of the property into different categories, and each of those categories would then be depreciated on a different schedule or over a different number of years. So some components of a property could be depreciated over 5 years, 7 years, or 15 years. And you would need to hire an expert to come do the accounting of a cost segregation study to find out if it's worth using that method to depreciate your property. It could definitely make sense if you're planning on holding the property for fewer years than its entire useful life. Depending on your specific real estate goals, it can definitely more than make up for the cost of performing the cost segregation analysis. So next, let's talk about depreciation recapture tax. So essentially when selling the property, you're liable to pay back a portion of the depreciation deductions savings that you benefited from over the years of holding the property. Currently, the rate is 25%, meaning you would have to pay back 25% of all the depreciation you benefited from when holding the property. However, when you're purchasing the property, the depreciation clock would be reset, so to speak. So the previous owner's depreciation that was claimed wouldn't really affect you. Your depreciation would start over at the 39-year mark. You would start at year one when you purchased the property. And finally, I'll mention bonus depreciation. Bonus depreciation was a benefit to small business owners and real estate owners in the Tax Cuts and Jobs Act of 2017, essentially saying that a business can write off 100% of the cost of eligible property or certain improvements or fixtures or machinery if it was purchased between September 27, 2017 and January 1st of 2023. So a business would be able to write off 100% of certain improvements of the property, not the entire building, but certain improvements and components of the building in the first year, claiming a large amount of depreciation up front, which could be a huge tax benefit, especially if you're not planning to hold the building for the entire useful life. However, this wouldn't last forever. It would be phased down by 20% per year starting after 2023. So it would go to 80% of the value, 60%, 40%, 20% in 2026, remaining at 20% of the value that you could depreciate in year one. So this applies to qualified business property and investment property with a useful life of less than 20 years and doesn't include the land or the building, but certain features, improvements, and components of the building. So hopefully this video helped you understand depreciation in the context of real estate investing. Please reach out to me if you have any questions, subscribe to my channel, and I'll see you in the next video.